Hi viewers, we're here with Dion Hershan, Head of Australian Equities at Yarra Capital. Welcome, Dion.
Thank you, Damian.
So we've got the Magnificent Seven in the US. Australia has their own seven as well.
Yeah.
What do you think about our seven largest companies here?
Well, frankly, they probably couldn't be more different from the US seven largest companies. The seven largest companies in the US have been growing at a 30% earnings clip for 3 years. Our seven biggest companies haven't grown their earnings. They're not projected to in the future years. Our seven biggest companies are obviously the four major banks, which are reasonably mature, competitive business with falling returns. The ROEs are unrecognisable versus what they were 10 years ago. And the three major miners, which are largely iron ore miners. So whilst it might be the Magnificent Seven in the US, we often refer to them as the Mundane Seven in Australia. They're big, they're cumbersome, they're actually quite solid businesses, but they're certainly not growing, and there are a series of earnings pressures that you have to contend with.
Yeah, so I think for Australian investors, probably best to look outside of that space.
We think outside the seven biggest companies, you get superior growth, superior diversification, you get adequate liquidity, and they're just less efficient businesses.
Yeah,
Less efficient stocks, I should say.
Yeah, very interesting. Thanks, Dion.